What is up, investors? Welcome back to another episode of Everything Crypto, where we talk about everything related to the crypto markets, including the latest and most important news, deep dives on projects we see as having huge potential in the future, as well as technical analysis on all coins featured on the channel. Now, as always, please remember that nothing on this channel is financial advice, but rather my own thoughts, opinions, and research that I have compiled and broken down into a more digestible format for you, the viewer. So all you got to do is sit back, relax, grab that morning cup of joe, and enjoy the content. And on that note, if you guys do enjoy the content, please consider supporting myself and the channel by hitting that sub and like button, by showing some love to the Twitter page. And for those of you that have been with this channel for a while, you know that the number one principle is to be fully transparent with no paywalls or paid groups associated. And that is how we roll over here. And in the spirit of this rule, we are also going to be launching our own Telegram channel next week, so stay tuned for that. And with that out of the way, we are going to get right into today's content, as this is a very important video. And what we're going to be talking about today is actually how you guys can spot rug pulls and scam projects. Now, I think this is going to be increasingly important moving forward, as we have discussed on this channel that as the SEC does actually begin to clamp down on the centralized exchanges, that more and more people will begin to turn to DeFi. However, with DeFi does come the additional risk of actually running into these rug pull and scam projects. And the reason we're really making this video here is sort of as a follow-up to the video we dropped that was regarding Finance and how it crashed about 30%. And we did discuss how MMF themselves did not rug pull, okay? Finance themselves are a legitimate project. I do believe in the future of this project. However, the reason we did see this crash was because that potentially one of the projects that was built out on Finance does actually appear like they may have rug pulled, and we don't have all the data yet, but I am going to let you guys know what we know. And for the most part, really, to break it down, these bad faith actors here, what they did was they actually sold majority of their native protocol token at the very peak here, as well as their Finance tokens, and they also did go ahead and scoop some up at the bottom. So they sold here to take profit at the top, and they also sold at the bottom to make some money on the way back up. And who we are talking about here is CRO Finance, and I'm going to read you a little excerpt that they did send out to the community. So they say here, there has been a lot of speculation over the last 48 hours regarding our integrity towards the project. The below is a brief explanation of the actions that were carried out by us and the reasoning behind them. It was observed by traders of us selling Lion to USDC, which is their token, which was then moved into the DAO Treasury Fund. The intention of this transfer was to spread the tokens held and any possible risk of liquidation that could potentially happen if one token was held in the treasury. We will be using these assets to do a buyback of SVN from the secondary market and hold only SVN in our DAO treasury. Unfortunately, due to this transfer, investors saw this as foul play, and as a result, a community-wide panic was started over Scrub and the MMF ecosystem. Whilst our decision may have been miscalculated at the time, it was by no means done with any malice and only done in accordance with what we thought would be best for the project. There is also speculation we have supplied the SVN to lending platforms so we can short it. That is totally not true. Reason being, we are supplying SVN simply because there is no single staking for SVN, and we want to maximize our yields for our DAO. We do understand there are many unhappy investors now, and for that we do apologize from the bottom of our hearts. Whilst the mistake was made, we are only human, and with the help of the MMF team, we will always strive to do better. So essentially, what they have done here is acknowledge that everything we saw was correct. They were, in fact, selling their native token Lion to USDC and then moving it into a DAO treasury. This did cause a widespread panic, which did actually cause this 30% correction in Finance that we saw here pretty much from the 13th to the 15th of April. And the unfortunate thing about this scenario is that they are fully admitting to what they did. However, what they are doing is basically saying that they did it for the betterment of their community. And the problem here is that we really cannot verify what their intentions were behind these actions, okay? Now, that is why I am still hesitant to go ahead and say that they are for sure rug pulling, because they could turn this around. But I do have to say that based on their actions and based on the fact that they said right here, whilst our decision may have been miscalculated, I would not be touching these guys with a 10-foot pole, okay? If the team behind a project cannot do their own calculations on how selling parts of their treasury would actually impact the price of their project as well as the DEX that they are on, then that is not really a team that I have faith in. So have they rug pulled? Have they not rug pulled? The truth is we cannot say for sure, but I think this does really speak to the importance of actually doing research in these projects before you invest. And what I'm going to do in this video is break down how you can spot these bad actors in DeFi to help protect your hard-earned capital. So with that said, we are going to get right into some very important tips. So what we're going to do is, first of all, go over this article here by the Chronicle that does have some really good tips and tricks for how you can spot rug pulls and scam projects. And then we are going to go ahead and actually show you how you yourself can verify this information for any project that you are considering investing in. So the number one thing that they did list here to look out for as a huge red flag is anonymous teams. Now, it is worth noting that anonymous teams in crypto projects don't immediately mean the subject project is a scam, as although they don't disclose their identities, how transparent are they about what they are doing and what they build? What are their on-chain wallets and how are they using the funds? And do their pseudo-anonymous names have any sort of reputation? Now, the second thing here you want to look for in a team is a lack of crypto background and weak or irrelevant team member. And this means that if you do not have at least some members on this team that do have a deep understanding of blockchain technology, of decentralization, of Web3, of staking, whatever it may be, that this is probably a project you do want to stay away from, as even if they are not a rug pull, it is highly unlikely that they will be able to advance with the rest of the community. This one here, out of jurisdiction projects and their backing legal foundations, this is something that I don't see as high of a risk. This next one, however, I see as a huge risk, which is the copy-paste code, okay? And one of the selling points of cryptocurrencies is that they are fully open source, meaning that everybody with an internet connection can see how the software behind any cryptocurrency works and what the exact code is. Now, there is another benefit to being open source, that every software problem has to be solved for once in the industry. And when a successful crypto project develops an efficient way for implementation or creates an entirely different application, other projects can adopt it and use it to their design. Now, the problem here arises when low-effort projects simply copy-paste what other projects do without adding any of their own inherent or unique value, which does raise the question of why do these projects even exist. So, as an educated investor putting your hard-earned capital into these projects, you should be asking what they are planning to invest in with your capital, what proportion of the project software has been borrowed from others, and what is their own contribution to making their value proposition more deserving. Now, this one here, the project just appeared overnight. This is definitely a big one that you do need to keep an eye on, okay? So building a community is not an easy task, and there are no shortcuts to doing it if you want it to be a long-lasting project. And if you see a project appearing overnight with their site and their social media channels, or a Discord with thousands of followers, but they've only been created within the past couple of days, the odds are they are most likely using bots to inflate the numbers of their followers. They may be paying a freelancer to go ahead and actually, advertise their website, or they could be paying social media influencers to advertise their projects, okay? And there are a lot of bad actors out there in the social media community. I see it on Twitter all the time, people pumping up these rug pull projects, and that is something that we do stay away from on this channel. That is why we always keep it real, but you guys need to be aware that even these influencers that you see on social media, they cannot all be trusted. At the end of the day, some of them, if they are given a high enough price tag, they will sell out and promote these rug pulls. They make money and all of their followers lose money. Okay, so if you see this type of behavior, once again, you should probably not touch this project with a 10-foot pole, like a 20-foot pole even, okay? Now, low liquidity. So basically, liquidity is the measure of a project's popularity in the market by how much money goes in and out. And actually here, if we look at Finance, that is one of the reasons that this was so easy to rug pull, okay? This thing only has a volume right now of like 69 million on a 24-hour basis, which is really peanuts, okay? It's ranked about 2836 on the total total crypto market cap. So as it is a new project, it is also pretty low liquidity. And the reason this is important, is because liquidity is proportional to the number of investors who are buying or selling. And the more a project has a liquidity, the harder it is to influence or manipulate its price in either direction, whether it is up or down. And it is effectively a market sensitive measurement of the project's esteem. So what they're saying here is that a project with low liquidity is much easier to manipulate if there are just a few big players that are taking up the majority of this low liquidity. Now with high liquidity projects, especially the established ones like Bitcoin and Ethereum, it is much harder for any single individual to manipulate, as there is so much volume that these, if they're trying to dump the project, there are probably so many buy orders on the other side that this high level of liquidity does protect investors from these crashes, okay? And last but not least, and I think this is really important, is disproportionate token distributions, okay? We always talk about token distributions and tokenomics on this channel. It is not only important to understand the tokenomics of any project you are investing in, but also to actually verify that what the team has cited as their tokenomics is actually the truth. And this is how you can do it, through actually checking their wallets and funds. And you do want to make sure that they are being transparent and seen by anybody. So this means that people can see how much funds pseudo-anonymous addresses hold in their wallets and how decentralized the project's tokens are in the community. It is generally a bad sign if one wallet has a huge amount of tokens, or a couple of wallets hold a large proportion of all tokens. Now, this is not always the case, and I will use CRO as an example here. So we're on Etherscan right here, and what we're going to do is go ahead and actually search CRO in the search bar. Now we're going to go over here and actually take a look at the main holders of CRO. This is going to show us all of the wallets that do hold the majority of CRO. And what we can see here is that there is one wallet holding 76 billion CRO, which equates to about 76.382% of the total CRO float, okay? However, if we do actually look at Crypto.com website themselves, they did confirm here that 70 billion CRO was to be burned, as well as an additional 5.9 billion that were being allocated as mainnet block rewards for their DeFi staking. So that means when we actually take a look here at Etherscan, we can actually go ahead and confirm here that you see they are burning CRO really on a daily basis. By the minute here, they're burning CRO. And that is how you can actually verify the legitimacy of the project, okay? So it is not always a concern if there is a large majority of tokens held in one single wallet, as long as the team is fully transparent about what they are doing with this CRO. And you can also confirm it through actually checking on Etherscan. So just something to keep in mind, that you do want to be aware of unique token situations with these projects, okay? So this means that the project and its price is prone to be controlled by a couple of large players if the majority of the float is held by a couple of entities. And although this can also signal conviction for the project if someone has a large number of tokens, they could also be an insider that knows exactly when to unload their huge bags to crash the market. And I do believe that that is exactly what happened here with Scrub Finance and Finance. So bag holders can distribute their tokens to more than one wallet to make it seem like the tokens are not concentrated as well. And there is no strict way to really approach this, but a general rule of thumb is the more tokens that are distributed along many wallets, the better. And this is the unfortunate truth here, is that, again, I mean, you can see this CRO here. Now, if Crypto.com was being shady about it, they could have spread out this 76 billion CRO over 76 different wallets with 1 billion in each. So this is not exactly a perfect way to tell, but if you are invested in a project, you would obviously want their team to be transparent about the amount of crypto they are holding. So that is just something to really keep in mind. And with that said, we are actually going to now show you guys how you yourselves can actually verify this information. But first, I do want to give a quick shout out to the Chronicle. They did provide all the information in this article, and they are this video sponsor. So I do just want to give you guys a quick word on the Chronicle and why I use them on a weekly basis for my Cronos research. Now, you guys know that Cronos is our favorite project here on the channel. They are always making moves in the market, so much that it is almost impossible to keep up with, and that is where I highly value the Chronicle.com as the #1 news site for all things Cronos chain. They got a directory of about 100 projects on Cronos with voting and comments, a community calendar of NFT drops and token launches, and tutorials on how to get started with the Cronos ecosystem. They are followed by the Cronos CEO Chris Marzalek on Twitter, and they were actually a part of the first batch of Cronos ecosystem grant recipients. They have just launched a new initiative, Project Collaboration, where they have opened up their website to projects and crypto-focused authors to post their own articles. Think like Medium, but on a Cronos-focused site with all project articles posted in one place. And this is because the Chronicle understands that bringing awareness and eyes on Cronos projects is challenging, so they've made it easy for investors by putting all the best Cronos projects in one place on their site. So go ahead and follow them on Twitter and subscribe to their website to get notified on the latest published articles. If you like Crypto.com and CRO like we do and want to stay up to date on all things Cronos chain, following the Chronicle and using their site will be a great way to go. Exciting things are on the horizon for the Chronicle, so check them out as your one-stop website for all Cronos news you need. Why get info from several sources when you can get everything you need right at the Chronicle? Now, based on the information in this article, as well as my own experience and research in crypto projects, there are really 5 key things that I do look for to know if I can truly trust any team behind a crypto project, no matter what they put out there on social media, okay? These are 5 key things, and you do want, ideally, any project you are investing in to actually check all of these boxes. And we are going to be using Crypto.com and Hedera as our examples to go down this checklist, as they are both teams that have done a really good job of being fully transparent and open with their community. So for starters, the team behind the project, are they transparent about their identities, and do they have experience in the field? So you can go here to Hedera's homepage, and then if you go to About, you can see right at the top there is their team members. All of them are fully transparent with their identities, meaning you can hold them accountable. You know exactly who they are, and they do also have biographies on their website. And we can see here that Dr. Lehman Baird, the co-founder and chief scientist of Hedera, is actually the inventor of the Hashgraph distributed consensus algorithm. Okay, this is the man behind the Hashgraph that powers Hedera. So you can look at all of their bios and you can verify whether or not this is a team that you would put your money behind. Now, for number 2, the tokenomics of any given project. So as we discussed before, Crypto.com did announce when they were doing that 70 billion burn. And we can see here right now that CoinMarketCap has Crypto.com with a circulating supply of 25.2 billion. And then we can go ahead and confirm in the wallet that there is an additional 76.3 billion. Now, CoinMarketCap's numbers here are actually a little bit off, as they did have a 100 billion float. So given this a null address here, their actual current circulating supply would be something like 23.7 billion in circulation. However, you can see here that the tokenomics do match up with the information that Crypto.com has released, as well as this dead wallet address where they have been burning the CRO. And for number 3 here, the copy-paste code. So because blockchains are open source, this does mean that really any other project can go ahead and just build on the same project. What you want to see is that these developers are actually bringing their own unique value proposition to the project if they are copying and pasting the code from another open source blockchain. Now, Hedera is a little bit of a unique situation, as they are not actually built on the blockchain, but they are built on the Hashgraph, and that is one reason that we are so bullish on Hedera, as we do see the Hashgraph essentially as a blockchain 2.0. However, we can use Cronos here as an example, and this is an EVM compatible blockchain. Well, so what? There are multiple EVM compatible blockchains. You want to actually make sure that Cronos is not just simply copying and pasting this code, but they are giving their own unique value proposition to investors who are choosing to put their dollars into CROcoin. And that is something that we are absolutely aware of, something we are very sure of based on all of our information and research into CRO. So that is just something you want to keep in mind, that anybody can actually create their own project, their own chain, with a little bit of technological knowledge and how to actually copy this open source coding. But what does the team do to actually provide value, and instead of just copying and pasting from another project? Now, liquidity I mean, this is another very simple one here to check. You can simply just go to CoinMarketCap and actually check the 24-hour volume of any of these projects. So, I mean, we can go to Bitcoin here and we can see that in a 24-hour period, about 25 billion in volume has been done on Bitcoin. You can also zoom out here and actually get a better gauge of their volume on CoinMarketCap, which also does break it down there. So you can see here that at this peak here on a big dip, we did 106 billion in volume. Right now, we are doing about a quarter of that volume at 25 billion. But this is just something to keep in mind, is that you do want to see high liquidity so that these tokens are less susceptible to being moved by a couple of big players. And last but not least, you want to look for an audit and white paper on every team's website. You know what? I need to highlight this. This is the most important one. Guys, if a project you are investing in does not have an audit or a white paper, do not touch it. Let me repeat that again. Do not ever touch a project without an audit and a white paper, okay? You need this audit and white paper to actually verify, first of all, the white paper is what this team intends to do in the future, right? So if we take a look at the Hedera white paper here, this is a 97-page document detailing everything that the Hedera Hashgraph has planned for the future, okay? It includes their members, it includes their plans, it includes the value proposition of HBAR, it includes the tokenomics, and here you can see some of the use cases: smart contracts, file service, the consensus service, and this was made in 2020, okay? And what I do know about Hedera is, since they have actually made this white paper, they have delivered on majority of the promises in their white paper, okay? They even break down the Hashgraph consensus here for you. So you need to look for a white paper and an audit, especially if this is a new project that you do not have much information on. You need to be reading these papers, okay? And the truth is, even the white paper, while it is a useful source, people can lie on white papers. It is unfortunate, but people can lie. However, something like an audit is much more serious, as it is done by a third-party source. So what you would want to do here is you would actually want to go ahead and check who this third-party source is. You can verify their information and if they are credible auditors, and then you can actually go through the audit, and the audit will tell you, you know, thanks for consideration, if there are any flags in the project, and then it is up to you as the individual to assess whether these flags are important enough that you do not want to invest in the project, or if there are just small flags that you are willing to take the risk on. However, you absolutely need to be checking these white papers and audits, okay? So any crypto project that you are investing in should make it incredibly easy for you to find these 5 things. Now, the tokenomics you can find on CoinMarketCap, the team behind the project, the copy-paste code. You can also verify this on CoinMarketCap just by checking what blockchain they are built on. However, the tokenomics, the team behind the project, and the audit/white paper, these should all be coming from the project's website themselves. And if there is a crypto project that is withholding any of this information, I highly recommend that you do stay far, far away, so you actually are able to protect your hard-earned money and avoid getting involved in these rug pulls and scams. And this is why I made this video, because I love this community. I know that all of the money you guys are investing is your hard-earned dollars, and I would hate to see anybody lose that to any of these scammers, okay? What they do is absolutely shameful, and I do not want any of you to forfeit a single dollar to these scumbags. And again, as time goes on, as I think DeFi will become more and more popular and way more important to the crypto space, it is also important to acknowledge that there are these bad faith actors who will try and take advantage of people's lack of knowledge, and that is why I'm here to try and give you guys the knowledge on how you can do your own research into these projects. So I do hope you guys enjoyed this video. We will be back tomorrow with some more Cronos content. We're going to be talking about Cronos name service, the Cronos metaverse, some of the NFTs we have been buying to get ready for the upcoming Cronos verse. We got a whole lot of Crow content coming this weekend, so I got to get back to work for you guys, but I love and appreciate you all. I hope you have all had a successful start to your day. Peace out for now.